Hey, Market Chameleons. Thanks for joining us for another pre-market show. How are you doing, Dima?
Pretty good. Will, how are you doing?
Great, great. Before we get started, everyone, this is the Market Chameleon pre-market show. We are doing this on Zoom. I will put out a link on the YouTube Live because we have a lot of people who watch us on YouTube Live. If for any reason your screen is fuzzy, you may want to link over to the Zoom. Put any questions you have in the chat, either on YouTube Live or the Zoom, and we will try to get to them. If you are on YouTube Live, please give us a like, and everyone should subscribe to the channel. It's great information, and you get notified when anything new comes out. With that, Dee, you want to go to the disclaimer?
Yep. Good morning, everybody. Thanks for joining us. Before we get started, keep in mind, Will and I, or Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, reach out to either your registered investment advisor or call your broker. They should be able to help you answer any questions or give you guys guidance. There's the disclaimer, everybody. And with that, I think we could get started. I'm going to share my screen really quickly.
Awesome.
So for today, we'll start out with the pre-market report. And if you guys are joining us for the first time, welcome. And these are stocks that are trading in the pre-market hours before the market opens. We got the most active stocks, biggest percentage gainers and biggest percentage decliners. And really quickly, I'm just going to use my filter here and first look at if anything is going on in stocks that have a market cap of 50 billion shares, a market cap of $50 billion or more. So over here, we see that in a pre-market hours, that list filtered out 36 stocks, big percentage gainers, 2 decliners. So it bodes well, I guess, for bullish opening when we look from the high market cap stocks in general. And we see at the top of the list, NKE up 4.6%, Tesla up 4.5%, Rio up 4%, NVDA up 3.2%. Coming down here, Apple's up 2.3%. I think Apple has an event today. I believe something that they might be talking about, either their new iPhones or their watch. What's that called? What is their watch called? Apple.
It's called the
I can't hear you well.
Can you hear me now?
Yeah, you sound far away though. Anyway, I believe that they have an event today coming up. So we'll keep an eye out for that. Let's take a look at the unfiltered report really quickly. Now I'm looking at any. At the top of the list, we see a small cap stock, MRNS, up 62% on 4.4 million shares. That's a $257 million market cap stock. It looks like it has some news coming out today. It's a biotech stock, closed at $2.11. It's trading at $3.40 in the pre-market hours, up 61% from the closing price. The range in the pre-market is $3.20 to $3.80. We see biggest VWAP bar here, $3.40 to $3.44 on 1 million shares. And just this is what that stock looks like in a pre-market. This is a pre-market chart. Let me take a look. So 4.4 million shares trading in a pre-market hours compared to a float of 121 million. Again, this is a low cap stock, could be very liquid, but I'm not going to go interpret the news on it, but let's just take a look at it from the perspective of historically, how did the stock perform when it had a big gap up in the morning? So this is looking in the last 3 years, the 12 largest gap moves. Here are the dates for those large gap moves, any kind of notes if they issued a press release, if the market gapped up. So we have them right next to the date. And here we see these are the gap moves on each date. So on average, the 12 largest gap moves up 13.5% with a high move. Let me see, 41.6% at the open right here on September 26, 2019. Press release on that date. That's compared to today's 61%. So today way higher than that highest move in in these 12 observations. So let's take a look what tended to happen to the stock after a large gap move to the upside. So we see from the open to the high, the average move was 12.6%. From the open to the low of the day, the average move was negative 8.9%. From the open to the close of the day, it was up a little bit more often than down. 58% of the time it closed higher, 42% lower, for an average gain of 4.1%. Very volatile. You see that on average from the open to the close in either direction, the move has been up or down 8.3% with a high move of 29.9%, which is right here on December 20th, 2019. So really quickly, low cap stock, just as an example, we took a look at the historical return distribution of MRNS after gapping up in the morning. That's a really high move. Will, do you have any questions in the pre-market for any pre-market? Okay, so if no questions on the pre-market report, we'll just kind of move on from here and go to the next report. Let's take a look at what's coming up in the earnings front. So these are earnings coming up in the next 2 weeks. We're going to take a look at from the perspective of what the options are anticipating the move to be in either direction, the magnitude of the move, compare that to actual historical moves to see if it's underestimating or overestimating versus those historical averages. So I'm going to the full report next 2 weeks. Let's filter out stocks that on average trade at least 5,000 option contracts or more. So I'm using this filter up here. So here we see this, these are companies that are expected to release today at the top of the list after the market close. We have FedEx, that's expected today after the market close, September 15th. As of yesterday's close, that's near term. Option straddle, buying the call, buying the put at the money, is anticipate a move of, implying a move of 10.1% in either direction. So that compares to the last 4 quarters, average move of 9.9% in either direction, and the last 12 quarters, an average of 6.1%. So we see kind of almost in line with that 4-quarter average, 0.2% above, 4.1% above that 4-quarter average. The high move in the last 12 quarters in FedEx was 12.9%. So that's from the option straddle perspective. Adobe also expected to report today after the market close. That straddle is implying a move of 7.7% based on yesterday's closing prices. We haven't opened yet today. That compares to a 4-quarter average move, actual move of 7.1%, and the 12-quarter actual move of 4.8%. So we see here that's 0.6% above that 4-quarter average, 2.8% above the actual 12-quarter average. The high move on that is 17.7% in the last 12 quarters. We also see here, right now, we're implying a move of 7.7%. The implied moves in the last 4 quarters heading into earnings, according to the option straddles, the average was 5.2%, and the average of the implied moves heading into the last 12 quarters was 4.5%. So we see this time around, those implied moves are anticipating higher than the historical averages. So that's FedEx and Adobe. Well, do you have any questions on earnings? If you do, let me know, or well, I'll just.
There's some interest in this SFIX. This is kind of like an internet play that people have been staying at home. I think they deliver stuff via.
Is this next one, SFIX?
Yeah, they were looking into the option strategies and IV crush going into the earnings. I don't know if that's something.
Okay, so let's take a look at that one. Now that one's coming out like in a week, so it's a little bit further away. Obviously, those option prices are going to start changing as we get closer to it. But let's take a look at it from a historical perspective. So I just clicked on this SFIX. So here we see these are the historical implied moves versus actual moves. So this bar over here, up and down. Here's 0, and this is what the options market predicted the magnitude of the move to be in up or down. The red that's the actual move to the downside. Green, that's the actual stock move to the upside. So over here, let's hover over this one. So on December 19th, December 9th, 2019, the stock reported after the market closed. The next day it was up 4.8%. That compares to the straddle, implying a move of 15.7% in either direction. So that move obviously wasn't as high as what the market was predicting. So that move was overestimated. Here we see on March 9th, 2020, after the market closed, the actual move the next day was down 25.2%. The straddle was implying a move of 18.5% in either direction. So that move busted right through the straddle. So that's how that you see here the historical last 12 quarters. So here's what let's see, a summary of what was happening. So the options markets, they overestimated the move 55% of the time, 45% they underestimated the move. The average of the implied moves in the last 12 quarters was up or down 18.7%. That compares to the average of the actual moves of 16.6%. So you could see on average, there's about a 2%, a little bit over 2% differential between the implied and the actual. So that's only looking at the implied move versus the actual historical moves. Let's take a look at what the implied volatility did. So this is a little bit different because we're going out 30 days. We're not looking at the near term options, right? Because the near term options you would be using for the move, right? They have very little, they'll have less vega, more gamma. Let's go out to options that have at least 30 days, 30 trading days to maturity. So this is what we're looking at, options that are 30 days to maturity. And we're looking at what the implied volatility tended to do. Those are the people who play the implied vol crush. They'll use the calendar spreads, right? They'll hedge the move, buying the straddle in the front month, selling the options in the out month for non-implied vol crush. So let's take a look at what happened here. On average, the implied volatility decreased by 34% day after earnings. So one day or the day before earnings, the average implied volatility in that 30 trading days to maturity was 100.5. The implied volatility the day after earnings dropped to 66.1, and 5 days after reporting earnings, it's 66.2. So you see 34% on average implied volatility crush. Here, we're still a little bit far away. September 22nd, today's September 15th. So still kind of far away from the day before earnings. So we'll see what the implied vols are, as we get closer to that earnings date. We're still a little bit far away, so we don't know what that will look like yet. That's really quickly in Stitch Fix. What do they do, Will? Stitch Fix?
They ship, I think, some custom goods. They're a internet retailer. They ship clothing over the internet. Over the mail delivery, but it's via the internet.
Okay, like a retail e-commerce.
Yeah.
Okay, so really quickly, that's from a historical earnings picture. Anything else on the earnings, Will?
No, that's good.
Okay.
How's my sound, everyone? I've been getting complaints that I sound a little far away. I just made a technical change. I'm wondering if that's better.
Now it's better.
All right.
Yeah, so now I could hear you. All right, let's take
good.
a look. Let's take a look at the open interest real quick. So usually I go by let's do by symbol today. All right. So we're going to just take a look at, so this is total open interest in an underlying. So I'm not looking at a specific contract. Let's just take a look. I'm going to take a look for open interest where, let me see here. let's look at relative open interest. So in this situation, I want to see where the open interest is, let's say above the 75 percentile. So it's looking in the last 1 year, and it's looking at the total open interest, and we're looking at 75 percentile or above, meaning that 75% of the days historically were below the current open interest. So right now it would be kind of elevated. Also, let's take a look at the relative open interest to 90-day moving average. So let's just say we want something that's two times its average daily open interest compared to the last 90 days. We need a total open interest, let's say, of at least 100,000 contracts. Let me see how many so we still have 18. Let's make that the stock price itself has to be, closing price of the stock has to be above 25 bucks. All right, so here we go. So I narrowed it down to five candidates. So this is what we have. Apple Computer. So Apple, right now, the total open interest is 15 million contracts. That's 3.7 times its 90-day moving average. So that's 3.7 times the open interest. Basically a lot of open positions in the options in Apple. Adobe over here, that's 2 times its 90-day moving average. PRNB, 129,000 contracts. That's 4.7 times its 90-day moving average. What is this stock? Hold on. Principal Bio. It's like a biotech stock. Do you know that one, Will?
That one doesn't ring a bell, my friend.
Okay. SHLL, 2.5 times its 90-day moving average, 167,000 contracts. Let me take a look here. Shell Company. Do you know this one? I have no idea what SHLL. And Tesla. So Tesla right now is 3.4 times its 90-day moving average. The idea there is that, a lot of people putting in positions could create volatility, right? As you have more contracts open in the option space, more rehedging. Obviously, lots of people having different opinions where that should go. So these are the top 5 by total open interest. Let's take a look at the breakdown, open interest breakdown. So here in Apple, we already saw that's 3.7 times its 90-day moving average. We see 8.7 million of the open interest is in the calls, 6.3 million is in the puts. This gives it a put call ratio of 0.72, which is below the 90-day moving average of 0.84. So a little bit getting skewed more towards the calls than the puts. Let's skip to Tesla since these are not sure what these stocks are. So here, Tesla, out of the open interest, it's 3.4 times its 90-day moving average. 3.4 million of them are in the calls, 5.3 million are in the puts. We see that gives it a put call ratio of 1.55, but that is below the 90-day moving average of 1.63. So based on that moving average, it's starting to get skewed a little bit more towards the calls than the puts based on the average. So that's looking at open interest by symbol. I could go by contract as well, Will, if you have questions on the open interest. If not, I could just move on to a different report.
Yeah, you can move on to a different report, but just that SHLL that you were talking about, that's one of these SPACs, special acquisition companies. And there was another one in the news this morning. They're buying a large commercial real estate internet-based, I think it's called Open Door. But it's something that actually I've noticed people have been asking about, a list of the SPACs, because so many issues have come out in the last year that are kind of taking tech companies public. I don't know exactly what's embedded in this SHLL, but
right. So it's like a holding company of.
It's basically they raise money. Usually it's the investors put up their own money, right? And they buy a shell company, and then they go out and look for a product to invest in. And the biggest, nickel, that's basically what Nikola was, NKLA, the electric cup but there are a bunch of them out there now. And this one, there's no information on it other than it was a SPAC issue. So it's out there searching for some tech company, basically, that they roll into this shell, and all of a sudden it's, a tech company.
Okay. So does it have to be a public company, or they could buy a private company and put it in there?
Yeah, no, they buy, well, they could do both, but they typically go out and buy a private company.
Okay. So basically, right, instead of, because investors can't really invest in private companies, they're not public, the shell company would be doing that for them in anticipation maybe that company will eventually be successful and go into IPO. Okay. Correct. So it's a different way of getting into like a private equity, private company investments. So there you have it. So that's the SHLL.
We did have a question about when you're going to another report. Someone and let me go back to the stock symbol, but they were looking at the block trade screener from yesterday. I thought maybe you could walk them through.
Sure.
The symbol was AXTA. Okay.
So let's take a look at, so this is the big money stock flow report. And what this is looking at is big block trades. Basically, it has to have a notional value. The trade itself has to have a notional value of $200,000 worth or more, or a block of 10,000 shares or more. That's kind of how they define like a big block trade. So this, what was the symbol, Will?
It was AXTA.
Okay, so you're AXTA. So this is what happened yesterday, and we had, according to our data, it was moving in a bullish manner. So here we see that the VWAP, according, just isolating those big block trades, the VWAP below the current price, which was support, $8.4 million worth of big block trades traded below that for VWAP price of $23.87, and that comprised of 13 total trades. So 13 trades, big block trades traded below the, traded at a price and saw the stock then drift higher. So that would suggest that they were cleaning up the sellers. One trade happened above the current price for VWAP price of $24.43, $623,000 in notional. So that would be the current resistance there, 24.43. The way it traded yesterday was that support and resistance yesterday was above the prior day's support and resistance. So it was breaking through the resistance in a bullish manner. That's why we're getting this bullish indicator. Let's take a look at the actual trades. So I'm going to switch here to stock block trade screener. And so right now it's set to today's date. I got to go back to yesterday's because this is all pre-market trades. So these are all big trades happening in the pre-market hours. Let's go back to yesterday's date, September 14th, AXTA. So this is what, these were the actual big block trades. So let's, right here, one right at the close. So this was the closing trade, 2.8 million shares, 115,000 shares, one trade, 115,439 shares at the close, $2.8 million worth at 24.19. Prior to that, 25,000 shares traded 24.17. That's $604,000 worth in notional. Here's a couple other big ones. 75,000 block of 75,000 shares traded at $23.66. That's in the dark pool at 11.27. That's $1.8 million in notional. 1054, a big block trade, 50,000 shares at $23.60 traded. That's $1.2 million in notional value on that trade. And then you see a couple other ones, you know, above 200,000, but these are the big ones that are highlighted here. And that closed in 2.8 million. So again, these are the large block trades. Usually they're going to be in the dark pool. Sometimes you'll see them though on the exchange, trading hands from New York Stock Exchange or NASDAQ if there's but usually you'll see those getting traded in the dark pool. They get matched up, and it looked like it was moving in a bullish manner. That's why I got that bullish indicator according to yesterday's pattern. Does that help?
Very cool. I just thought it would be worth walking the chameleons through it. You know,
Yep.
we had a question, and I'm sorry to take you back. This was from someone who came over to Zoom, Pavel. He was just asking about the gap ups on the morning report.
Yep.
He's asking about the data. You know, can he use it to make decisions on? Is it a day old data? You know, he just wants you to let him know.
It's today's data. So the data itself is based on what's trading today in a pre-market, right? So it's actual data. It's not, you know, this is what's happening. These are pre-market trades. You know, we're getting them from the exchanges, so we're not making up these prices. These are just prices that are actually trading in a pre-market hours. So you could go here, MRNS, and you know, let's take a look at MRNS.
It's just like everything on the Chameleon. The data's at a 15-minute delay.
It's at least 15-minute delay, right? Yeah. So it's not right. You're not using this. This is a research tool. You're not using it to, you know, high frequency, you know, trade in milliseconds or anything like that. But these are the minute-to-minute VWAPs. You know, 906 3. This is the amount of shares traded in that minute, 37,246 for VWAP price of 337. You see the high-low trade in that minute, the coming out bid and offer. So this is a minute-by-minute summary because there's too many trades to list one at a time. So we summarize it and give you a summary minute by minute. But these are actual trades happening in the pre-market hours.
Great.
Yep. Hopefully I answered the question. I'm not sure.
Yeah, no, that was super helpful. Thank you.
Yep. Were there any other questions? I could move on.
Well, I mean, people would like you to take a look at, you know, Apple and Tesla, but no real questions.
Okay. Well, you know what? Let's look at the unusual option volume because I think I saw Apple and Tesla in there. So let me just see. I'm going to sort this by, let's look at largest call notional trades. So here, Tesla yesterday traded 1.9 times its average daily option volume. So you see here 1.2 million contracts traded versus 90-day average of 673, 1.9 times its average daily option volume. In call notional, traded $1.9 billion worth of calls versus 608.6 million worth of puts. That was up 12% yesterday. Implied volatility was up 1.9%. NVDA, that traded 1.8 times its average daily option volume yesterday, $387 million worth of calls versus 105 million in puts. That was up 5.8% yesterday. That implied vol was up 0.8% yesterday to 77th percentile rank. DraftKings, that traded 4.5 times its average daily option volume, $136 million worth of calls trading versus 10.4 million in puts. That stock was up 17.3% yesterday. Implied vol was up 2.3%. FedEx, that's coming out with earnings today after market close. We were talking about $106 million worth of calls trading versus $14.5 million worth of puts. That traded 4.2 times its average daily option volume. NKLA, that traded 2.3 times its average daily option volume, $66 million worth of calls versus 76.5 million puts. So more puts, more in dollar value in puts than calls. was up 11.4% yesterday. Implied vol was down 21%. So you're talking about that one, right, Nick? Is that the one you mentioned?
Well, it's being mentioned on the chat right now. Jake's asking about the bonds, something I have
Something with the bonds?
no view on or ability to see right now. But yeah,
Yeah.
no, there were a bunch of stories about NKLA and maybe some interesting things going on behind closed doors and the product itself. But
Okay.
yeah, it's just it's in the news and there's a lot of trading around it.
Okay. So that's really quickly, from the unusual option volume report. Let me take a look. We only have 2 or 3 minutes left. So at this point, I'll just take any questions you have remaining.
Well, someone was asking about on the summary page in Tesla, the trade ideas for best option strategies for Tesla. If you could just explain one of those cards for him, that I guess the top 3 is by edge.
So let's take a look at trade ideas. So we got these 3. Now you could pick any of the, so we just fill them up, and what's happening is it's going to our option screeners, and based on our own presets, it's filtering out trade ideas. Of course, you could go to the option screen, start setting your own filters and your own criteria. These are starting points. So here it's just defaulted by top 3 by edge. You could do by win rate, bull call spread, or any, which will just list you all of them over here. So let's take a look at, here are the top 3. Here's credit iron butterfly, credit iron condor. So let's take a look at this one. It's a little bit better win rate. So this is taking a look at credit iron condor. It's looking at the selling the 410 365 put spread, and then selling the 465 510 call spread. So selling out of the money put spread, selling out of the money call spread. It looks like this one has a little bit of an upside bias because the call spreads were to close 419. So this one had a little bit. This was using yesterday's close, right? The markets didn't open yet today. So this is saying that the market price on it was selling was $26.40. Historically, if we applied the historical return distributions, we think on average it's worth $10.07, gives it an 87.8% edge with a historical win rate of 82%. So let's take a look at this really quickly. I'm going to click on it. It's going to take us to the options chain, and it's going to pre-fill those legs for us. So September 25th expiration, and it looks like they're going to have an annual annual shareholder meeting on September 22nd. So see, I'm hovering over that. So keep in mind that there is going to be some event there. Here, it populated the legs of this strategy. So I'm going to hit load strategy, and it's going to show us here. This is what the payout diagram looks like at expiration. So you could see anywhere between these 2 strikes, we would get the maximum gain of $26.40. That's the market. Keep in mind, midpoint 27.15.
Which we went, by the way, that payout diagram, we went through a whole hour-long episode last night, which everyone should take a look at. I just sent out the link where Dmitry describes in depth going from the options chain to the payout diagram. D, we're about to hit the opening bell, buddy.
All right, yeah. So sorry, didn't get it fully into it. Maybe tomorrow we'll pick up on, do one of these. Just focus on one of these. But everybody have a great trading day. Thanks for joining us in the morning. Hope to see you guys tomorrow morning. Any parting words, Will?
Thanks, D. Everyone, great show. Thanks for joining us. Thanks, YouTube. Remember to like and subscribe. Have a great, safe trading day, everybody. Bye, D.
Bye, everyone.